Hey, welcome back. It's Jason Coleman, mortgage broker with Price Mortgage. Big week ahead today. Tuesday and Wednesday, the Feds are meeting and supposedly going to raise the Fed's funds rate another 75 basis point. Maybe a small chance they could go 100 basis points. I mean, it really needs to go to 100, but I mean, what they're doing is what they're doing. I mean, they're in a no-win situation, so it doesn't. The Fed's funds don't affect mortgage rates directly. It is the balance sheet that they're trying to unload, or the quantitative easing that they're trying to reverse into quantitative tightening. So they're trying to sell the mortgage-backed securities instead of buy them and artificially stimulate the market. But last month we had a $13 billion increase on the Fed's balance sheet. So it looks to me as though they have not ultimately stopped buying mortgage-backed securities. So I think that's keeping rates a little bit low, along with investors piling money into the bond market. So they, are just trying to preserve capital. You can't just sit that money in a bank when you have millions of dollars. You're only protected up to $250,000, even if you have a combined savings and checkings account. It's just one institution. That's how much you're protected under one institution. Now, as far as Redfin's reporting price drops nationwide, they're saying that we have had a price drop of 0.7% nationwide on average. So every area is different. But here in the Phoenix area, we've seen a month over month 5% decline in the median value. Now, the median value is an average of highs and lows and all the sales that went on. So we saw it drop from 480 average down to 457. That's considered a price drop for you Dave Ramsey fans, who says prices are not coming down. Buy now, it's the best time to buy. So, I mean, if you're transferring 30% equity from one home to another, sure, you're going to lose that 30%, or some of that equity, not the whole 30, but you're going to lose some of that equity, if you just sat where you were. So if you found a better home, then hey, you're getting yourself a home maybe you wanted, or you had a choice now. Most of the people coming on the market right now, I've read some statistics, are in the 50% of them have bought in the last 6 months, or 6 or 12 months. So most of the listings that have come on the market have been bought in the past 12 months. So that's incredible. I think people that just bought, potentially investors or whatever, Airbnbs, those are the type of homes that are coming on the market. I think you get about 50% owner occupied, and the other 50% are, the investors, the second homes, stuff like that we're seeing on the market right now. But we have seen a 5% price drop here in the Valley, and we are leading the nation in speed of listings coming to market. This is probably the fastest I've seen this many listings come to the market all at, seems like overnight. Just a few months, we have like doubled or tripled what we had I think it's tripled what we had back in March, right? So I think we had like 3,000 or 4,000 in March. Now we had 18,000, over 18,000 going into this past weekend. So big things to watch out for this week are going to be earnings reports or lack thereof. So you've had, like Apple and Google and all these companies are reporting their earnings and giving guidance. And what we think is going to happen is because of, like what's happening in China and the lockdowns and all that shenanigans, I think the sales for Apple are going to be poor. I think the sales revenue, the advertising revenue for Google has been extremely poor, as being reported by a lot of YouTubers who get ad revenue. Companies are cutting back on their ad spending, on their marketing. So I think Google's going to come in with some disappointing numbers, and I think they have set the table, but I think that's going to lead to a further stock market decline. So we're already 20% down, one of the worst starts to the year in a long, long time. So I think we're going to experience another downturn after these reports come out. So I think those reports come out, Tuesday, Wednesday, and Thursday. So that combined, with the Fed's meeting and all that, we're going to see a blitz of media coming out and saying, oh, this and oh, that. It's going to be kind of negative. And I think that's going to have an impact on consumer sentiment. So buckle up, Buttercup. We're going into some challenging times here in the financial world. And I think people are, I've talked to some hard money lenders recently, and they're really, I can tell in the tone of their voices, they're going through a lot of uncertainty with even lending, and they've raised their prices in hard money. And we've seen a couple non-QM lenders go down and they're stopped lending. Even some lenders, some non-QM lenders are not even lending until the end of August, till they know for sure where the prices are going. Prices are going, because when you marry the house, you marry the price. And so sometimes it's best to have an engagement period before you marry the house. You can always date the rate because you can always change that, but you can't change the rate if you go upside down. So that little thing that they're sharing in my industry, marry the house, date the rate. You can't change the rate if you go upside down. If you only put 3 or 5% down, just month over month, we lost 5% here in the Phoenix area on the medium sales price. So if that can happen in 30 days, what can happen in 6 months? So I'm just throwing that out there so you are aware that this is going on. You're going to see a lot of blitz in the media about the Googles and the Apple and what's going on. And I think that's going to affect the entire financial consumer sentiment. So, hey, let me know what you think about the declines here. I am also watching Flagstaff, because Flagstaff also is bringing a lot of inventory. It's a big tourist spot in our state. And like I said, we had just sold up there in March, which I think March, April was the peak of the housing prices. And now we have this listing. Let's check out a couple listings here before we go. This listing just came on for $625, 1740-ish square feet, 3 bedroom, 3 bathroom. It's a single family, which usually sells for more than a townhome. And that's where they're starting their listing. And the ones that are going under contract are at $640, at $620, not $700. And here's my neighbor. He's what I would call delusional. He's got wish pricing on there. He has an extra door. He has an extra little studio on each one of his townhomes. But is that worth $150,000? I don't think so. I think he paid an extra $20,000 or $30,000 when he purchased them. But this guy's delusional. Here's another delusional seller, right here. And as you can see, price cuts. And now there's like 17 or 18 of these homes just in this little neighborhood for sale. So I think you're going to start seeing this all over the place. It's, buyers are on the sideline. The demand is cut in half. And I think it's going to get a little bit rougher here as we move towards fall. So September is when, we'll know for sure. Did we lose value? Did we lose another 5? Did we lose 10%? I think we're going to lose at least 15, maybe 20% going into 2023. That's just my opinion, and you do with it what you will. Thanks for watching. I appreciate your time, and until next time.